I wanted to go over first off, right, how to execute an options contract, right? So I'll set this down to like five, you know, just for example purposes. But a huge problem that I see is, traders may be able to identify an entry but unable to execute upon that entry, right? They don't have the strong enough confidence or confirmation behind the trade to take the trade. So move. So let me go through. We'll pull up like January 19th expiry. Yeah, yeah, Wednesday. And we'll pull like what was something that may have moved. 377, so 378 something. This would be closer to the underlying two. Let's see how that kind of looks. Now I know this, since this is a further expiry, it's not going to be as clean. Okay, just understand that, of course, but still gives us plenty to work with. Yo, what's up, Ryu? Good morning. What's up, Jerosel? That's right, brother. What's up, Charles? Good morning. Um, so like let's say here on QQQ, right? So this is on a 1 minute chart. This is also on the 1 minute chart, right? Ignore the indicators and everything like that. But um, this is just, I hate that this is not as reflective as an underlying, right? Because look at the volume, right? It's super low, but it still gives us some sense of movement. Maybe if I go further into the money, I don't know if that's gonna help or not. Need to look at which ones have volume. More open. See, the open interest is low. Let me look at this one. Much better. Much better. Okay, so what I typically have, right? These are three charts that are all linked on one. See this one red? Sorry, my dog is snoring. Henry, it's okay, buddy. You guys might hear him. He's getting old. Um, so I have three charts here linked, right? Whatever time frame you have. Sometimes I have another like different chart up here, like on a different link, just to look at a different ticker. But normally, right, this is what I have on my execution screen, as well as another kind of cell here that is a different link, right? This is strictly for the options trading. So a lot of people are like, oh, all of these don't match up. When I go to execute my options contract, I'm buying a common, whatever, right? This is how you prevent that. Okay, so you have to go to trade, just like I did. You right click if you want to buy a call or a put, depending if it's in the money or out of the money. Okay, in the money is purple, and out of the money being black, of course. I like trading the first 1 to 4 out of the money, depending upon the strength and volatility of the market that day. But always, always, this is something that has saved me so many times. Let me put the volume. Is looking at the open interest and the volume. Okay, you don't want to trade something like Pepsi. Sometimes Pepsi, just like, this is awful, right? Very low volume, very, very low open interest as well, right? The reason why we trade QQQ and Nvidia and AMD and all of these other major holdings, Microsoft, Facebook, Apple, all of those, is because they're liquid. There's always going to be interest in trading these options contracts, and I don't want to be stuck in a trade where maybe the underlying contract is not moving as fluidly, or maybe the contract is not moving as fluidly as the underlying, and I'm sitting there like scratching my head, hey, why am I not getting paid? And it's continuing up and up and up. It's up 3 points from my entry, whatever. So this is what I do, right? Go to QQQ. I think I had like the 380s up, right? Is that what I just had? Let me before I change it. Yeah, 380s. Okay, so you go to 380, you right click it, You go to send to. Remember the different cells, okay? The 1 was all of my underlying contracts, or the underlying charts, and 2 was for my options contract. Okay, so we'll press send to 2. Then it's going to pop up here. I have active trader here, and it allows me to choose how much I want to trade, right? If I want to buy market, sell market, buy the ask, join the bid, join the ask, and sell the bid, right? These are my sell and buy buttons. What's up? Good morning. Good morning. Let me put these up here for a minute. Here we go. Yeah, you guys can hear me, right? I had that issue last live session. Yeah, but that's once they're gone, they're gone. That's the thing, Kaizen. It's like, we were playing the Friday expiries, January 14th, right? So if I type in, I change this 19 to a 14, right? It's just gonna be gone. Oh wait, it's not there. Oh, it's still there. Why is it still there? How come every time these just disappear from me sometimes? Well, that's even better. Thanks, Kaizen. I don't know. Do you prefer having higher open interest and volume, or you simply need to have both high numbers? I don't have to have one over the other. Volume is more important than the open interest. The open interest, they've been all, everyone in the group reminded me that it's the contracts that were being held overnight, but the volume, is represented to today, or the day that you're trading. Okay, good. You guys can hear me. Yep, Discord can hear me as well. Okay, so moving on. Thank you, Kaizen, for that. That was much better of a chart to look at. Okay, so these 380, right? So if you're looking, right, these are 5 points out of the money, right? But it's still relatively close to the underlying with decent volume. So when we go through and I'm always watching the underlying and watching the options contract. So when we get a pop up, remember, I think Shiny Objects was messaging me this weekend just confirming, right, how we should trade options contracts. But when it is spiking up, I know that you have the urge to buy, but of course we need to quell that urge because these are very expensive. So let's see the price here at 932. Okay, I'll just mark an arrow right here, 932. Those are 70 cents. Okay, so 70 cents a contract, $70 a contract. But if you wait to buy on red candles, okay, wait to buy on a downtick, whether or not it's going to, you don't know if this is going to flush on you or whatever, right? But it's better to take the chance with a defined risk. So, always thinking about your risk when you're about to take a trade. So maybe you mark the low of the preceding candle. Okay, and then you also see that, hey, we've broken above VWAP, and the 9 and the 20 is supporting us. I like to take ads on the 1 minute 9 EMA on high momentum, very early momentum. So like this would have been a prime ad. Okay, so right there, 932, we talked about the very spike. This is where those who are market buying or buying the ask, this is where they're getting filled, without a doubt, 65 to 70 cents, right? Because you're not bidding in, you're getting the worst fills. So, I do buy the bid and the ask. I buy both, but on a downtick, I will buy the ask. I just want to get filled. I don't care about how many times have you guys try to join the bid, trying to be as frugal as possible and not get filled, and then watch this unravel, and then you take bad trades after that, right? I just want to get filled. So, but we see this. Let's say that you FOMO buy right there. You buy the big green candle on the spike up. So you have an average about 70 cents. Yes, it works in hindsight. But if you want to be a more, defined, precise trader, you're going to wait to buy on those downticks. So there's a trade up here for 70 cents. It ticks down 2 bars on the 1 minute. Okay, so 2 minutes it ticks down. Your now 70 cent options contract is now down here at 50 cents. Okay? That's about a negative 20 negative 30% move, right? 0.7 times 3 is 21, down to 50 cents. That's about 49 cents. Okay, so that's a negative 30%. Now, a lot of times people freak out when they see that. When I know when I'm trading a smaller or cheaper price contract that It may be more reflective on the percents, but we're talking about $20 a contract, right? So think about that. Don't freak out like, oh my God, it's negative 30, negative 40%, right? As long as you have a strong trend going on, you can be able to hold on to that move, right? A lot of times what traders do, they buy the 70 cent options contract, they're down 30%, they stop out, and then it rips in front of them, right? That's getting off tempo. And you're going to continue to trade that way the rest of the day, and you're going to be on tilt. You're not going to think about a proper entry or exit. You're just going to think about getting into a trade and experiencing that same feeling of euphoria, or chasing that feeling of euphoria of being in a winning trade, which ends up you randomly trading, revenge trading, and over trading. Yes, I trade full time every day. You can ask anyone here. I'm in here talking their ears off every day. Yo, what's up, Zach? Do I wait for the second red candle to close before buying? Not necessarily, right? So let's talk about scaling in. Okay, so we talked about why this is bad to buy on the big green candles. Now, if you're buying on big green candles, okay, what you can do at times is look at candle by candle, okay, higher highs and higher lows in an uptrend, and not get stopped out unless that candle begins to fail. So you can see here, like and typically on super heavy momentum, you're going to do on the 1 minute, but I really like to look at the 2 and the 3. So like you'll see here, like higher low, okay, and higher high, higher low, higher high. This candle breaks below, but it doesn't close, so you're still in the trade. It's higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower high, lower low. But it's a doji. Remember, we know how to trade dojis, and we continue up, right? The candle does not close on a lower low candle by candle until this candle here. Okay, so that's not a bad move. You would have only missed one more spike, which is not anything to be afraid of. A lot of times people they get this spike up and they don't sell, and then they end up stopping out down here anyway. So you cannot. One thing I really want to know, if the trade runs without you and you're upset about it, I mean, it's only going to tilt you. It's only going to make your emotions that much more worse throughout the day. Okay, if you can get a 20%, 40% trade, and your trade ends up running 200%, you can't be upset about it, right? We are traders aiming for consistency. Okay, so I'd rather take a consistent trade, a trade that is replicable, and a trade that I can over and over spot very consistently, rather than an anomaly trade. What you make on the anomaly trade may be good money, but I've talked to plenty of traders. I left 40K on the table. I left 50K on the table. Well, it's like, do you really think that you would have held that long? Would you have not locked out at plus 10K, plus 20K, plus 30K? Do you really think that you have the nerves of steel to really hold that long? And in most cases, traders don't. So always understand that. Take with what's consistent. Don't complain about it ripping in front of you, because who's to say that you would have been a trader with perfect execution? You would have known exactly when it was going to top and whatever else. So let's talk about scaling in and out. So you guys know, if you've watched the EMA videos, how I like to trade. I like to trade with supply and demand, support and resistance, pivot points, right? Talking about lower highs, lower lows, higher lows, and EMAs and VWAP, right? I'm a very strong price action trader. That's what I like to look at. I don't look at level 2. I don't look at time and sales. I hardly look at news, right? I'll be aware of it, but especially for a Fed meeting, I will be aware of it. But it's all about the candlesticks. That's all you need to know, right? When I first started trading, it was stochastics, RSI, MACD. I needed to know Bollinger Bands, the outer VWAP bands, all of this shit that you just don't need. Okay, it may benefit some people, but a lot of times, like when I take a trade, they're like, "Damn, how did you get in so early? How did you do that?" And it's all just the candlesticks every single day. So, what's up, Q? Sorry about the Cowboys, brother. But going through, right? How do you scale in? So, A good rule of thumb, a lot of people ask me this, the 9 EMA is a good dip buy. This is where you want to, start to scale into a trade, but it's got to be early on the momentum. Okay, when you are starting to buy a dip buy just blindly on the 9 EMA up here, right, you're not taking into context of what is going on the underlying chart. Thanks Velocity Trader for the sub. So going through, right, when I take a buy, I'm not buying when it's extended off the 9 EMA. That is when you scale out. Okay, when the 9 EMA is not going to tell you when to scale out, but it will tell you when to buy and give you a hint when you need to scale out. Okay, now depending upon if you're a scalper or if you want to hold on for a longer kind of picture trend, right, that's up to you. But going through, right, I don't think we have time to do on demand. It takes, I don't want to have to skip through all of that. We'll just go through the core lessons and preparation for the week. I'll be trading tomorrow. In the Discord though. But right, see these two bottoming wicks. Why does the 9 and 20 EMA work? Right, because many people use it every day. All of the concepts and strategies I use are very common. Everyone uses supply and demand or has heard of it. Everyone uses the 9 and the 20. Everyone uses VWAP. But if everyone uses it, it gives me that much more strength when I take a trade. So I've seen, hey, on this 9 and 20 chart, boom, they bought there. So on the next 9 EMA tap, I want to buy there, right? Where do buyers step in? On the next 9 EMA tap, I want to buy in, right? But a good rule of thumb is that the first two pullbacks on a momentum trade are your safest. Everything after that is rather risky, and you start adding into the liquidity of these options contracts or commons, whatever you're trading. So what I mean by that is when you buy here, right, where are you going to start selling, right? You want to maximize your profit. You want to sell up here and you want to sell up here, right? So when we move on, when these buyers, right, step in, okay, they're buying these guys' contracts, right? That's what's going on. We're trading, right? A lot of people don't understand like trading. They think like, oh, we're just trading the stock market. No, we're like trading between each other, right? I bought this down here for 50 cents, right? Let's just say I bought that for 50 cents. I'm selling it up here for $1.19, 100% move. Someone's just now getting into the options trade at $1.19. Okay. And what happens? What is the biggest rule that I talk about later entries, right? Later entries dictate quicker profit taking, because what happens? Liquidity, right? People have to scale. People are getting out of trades. The sentiment may flip, this or that, whatever. So, 1 second. So, scaling in and out. So a lot of times people are like, well, what if I'm playing 5 contracts and I need to scale in? So I don't like to average up. So like if I take an entry in a certain area, I'm normally grabbing my entry all there, not in one lump sum, but like I don't want, what's the point of adding, around a 50-cent contract and then adding again here at $1 and ruining my average? I might as well have bought in this 70-cent range, right? I might as well have done that. So I don't like to buy here, buy more, right? I like to just hold on to a core and ladder. We'll go over laddering next. But so when I enter into a trade, right, if it's down ticking and it's coming close to the 9 EMA, I will start to take a feeler entry just to see. Okay, so my entry might be about 60 cents or so. I'll add right on the 9 EMA. I'll add again on the 9 EMA if we get another tap. Okay, and then on the break, I'll add more. Okay, so I'm adding in fourths. Sometimes it's in halves if I have to be rather quick, right? Instead of just taking 4 entries, I'll take 2 and still get a full position size. But a lot of times, right, in the Discord, you guys will see, hey, I'm taking a feeler, right? That is me testing the waters, testing the room of this, or the feel of this price action and seeing, how buyers are going to react to that. So now when you're trading the 9 and 20 EMA, remember, the 9 is a strong dip buy, okay, or a decent dip buy where you want to get your feelers in. This area in between, depending upon how far out and how long we have been extended, is a strong area to buy. And the 20 is either you look at it as a major dip buy or a crucial support for your trend. So what I mean by that, right? 9 is respected, 9's respected. Oh, we come in between the 9 and the 20, the zone. A lot of people call them clouds, Okay, and that's fine, but it starts to show a little bit of weakness, right? Really strong rejection, now consolidation on the 9 EMA. And as soon as we close a candle, this 1 minute candle, as soon as we close that candle on the 9 EMA within this zone, right? A lot of candles are not closed very bearishly like that, a bearish engulfing. Okay, you start to see that overreaction. Okay, you start to see people selling, right? Locking in profit. Don't be a part of the liquidity. Okay, be a part of the dip buy, but don't be like, hey, I want to slap this up. When you are slapping green candles, you're buying and making someone money, right? You are selling, or you are buying a contract and giving your money to this person who bought it down here for 50 cents. And that's obviously how you profit in the market. So I also wanted to talk about laddering. So let me let me just remove some of these arrows. Yeah, MG ordinance. Laddering is dope. Laddering is so dope. So let's just say, right, 380 calls right here. Okay, boom. You take your entries on your 380 calls, so whatever. You get maybe a 3/4 or half position, or maybe a full position. Okay. Now on the next pullback on the 9 EMA tap, I'm not gonna buy the 380 calls again, right? I'm gonna go further out of the money. So let's say like 382. Okay, 382. Now remember, we bought these around 50 cents. Okay, 380 at 50 cents. Oh, hold on, let me 380 calls. Okay, now we want to buy on this next 9 EMA tap. Okay, so this is at 943. Okay, so 943 is right there. Look how much that is. How much is that? 40 cents. You're buying the same, around the same options price, right? So that's 382 calls at 40 cents. You see how the average is staying the same, but on two different contracts? Now, let me change this one. 1 minute trade, 380, call, send to 3. Okay, so this is the 380 calls, right? We just went through this. Oh, hold on. Okay. Okay, so remember, look at the time that we bought this at. This is at 9:43, right? That you would buy on the 9 EMA tap. So 9:43. This here, 9:32. Okay, so 10 minutes difference. Okay, this is at 40 cents here on the 9 EMA tap right there. Now, at this time at 9:43, these are at 40 cents, right? What are my 380 calls at? 9:43 right here. They're at 97 cents. So you've already gotten almost 100% move. But then you want to buy this. You remember buying around the same contract. You want a cheaper contract. Maybe you don't want to buy super expensive contracts or whatever. Okay, maybe you have a smaller account. You're better trading, dollar or less. So, that one, you're gonna keep your average here at 50 cents. And two, when you enter on this next contract on the 9 EMA, you have defined a proper risk here, and you're going to collect delta on the way up, right? These are going to move, and you're going to get a very strong percent gain compared to like some other people who maybe trade like at the $200 contracts and get like a 20% move, right? You can double your money. So when you buy right here at 9:43 at 40 cents, okay, we've talked about. Now when it spikes up, okay, at the very peak right here, right, 71 cents. So that's almost 100% right there. That's about 80%, okay, 30 cents from 40 cents. Okay, and then on the very spike up here, you get over 80 cents. Okay, that's a 100% move. So now what you've done, instead of just holding onto one contract, you've gotten multiple 100% moves on the same trade. Because if you didn't ladder, if you didn't take these 382 calls, you would have probably just held on to your original entry here, your 380 calls, and held through the trade. Oh, I'm not going to buy here, but I see that the 90 EMA is being respected, so I'm just going to hold on. Oh, I see the 90 EMA is being respected again, so I'm going to hold on, right? This is for more experienced traders. You don't really even have to be super experienced, just a more intermediate. I typically only do it with 2 or 3 contracts, really 2 most of the time. But you're going to make more on the same trade, okay? Now, I'm not saying it's sizing up. You're taking just another trade, so you're still using the same position size, but you're making money on the same movement, right? You're going to hold these 380 calls as long as the 90 EMA held, right? So why not add into your position on a different contract and make twice as much money? Make 200%ers instead of just one. So that's a brief little thing on laddering. I also want to go over, what is the next one? Break and base. Okay. Yeah. I hope that helps you out, right? If you haven't heard that before, you know, laddering or used it before, right? Put a 1 in the chat. But if your target is 380s on the Qs, then why not just add to the original contract? I just talked about that, right? When you buy a strike price, that's not my target, right? I'm not like, oh, I need to hit 380 and get, like, no, like, that's just, I'm just trading the premium, right? I don't really care too much about the strike price, whatever. I just want the premium. So, when you're going through here, remember we talked about, if you have a 50-cent average and you get a full position size, that's good. You know, let's say you buy, let's just say for example purposes, $1,000, you know, and you have a 50-cent kind of average. Okay, you have gotten such a good average. Okay, you've gotten such a desirable pullback. Why would you ruin it by averaging up? Why would you do that, right? Why would you add to your winner? Okay, because right here, 380 calls, the 380 right here. Yeah, the contract going to cost more when you add. So right here, 50 cents. So let's say we add the 380 calls more on the 9 EMA tab here at 943. So here at 943, right here, 50 cents. Or this is 934. That's at our 50-cent entry. Now at 943, how much are they? They're 97 cents, right? So now you've gone from 50 cents to 97 cents. If you add more to that, let's just say you add a half position or whatever, you're going to have to, of course, thinking you've scaled out along the way, right? You've scaled out and then added more. It's going to ruin your average. You go from a 50-cent average to about a 70-cent average. So you might as well have just said, you know, forget precise trading. I'm just going to buy these big green candles. Right, and sure, in hindsight, they work, but they won't work for the longevity of your trading career, right? You have to do with what's consistent, with what is less risk, always valuing what entries you have. Why would I sell these A1 entries here for crumbs and then ruin my entry, right? Laddering is much more efficient than just averaging and buying more into the same contract. Yeah, but you said if your target is 380 in the Qs, well, then why not just add? So that's why I reiterated that. Okay. Okay, so I want to go over breaking bases. Let me find well, before I go over breaking bases, I want to go over who was asking this. I think it was Parks. He said, I've mentioned before that you like to play the same tickers whose personalities trend very nicely. Could I discuss if that list changed at all over the last few months, or is it still the same core tickers? So, as you guys know, I still trade the same core of tickers, right? But they may change due to the trend. So normally when I'm looking at a strong trend, or searching for a strong trend, I like to look at the 10-minute. Okay, and we'll go like on, you know, like NVIDIA. Okay, I love NVIDIA. Now, normally when I'm scanning through, and how I find a strong trender or something that is very simple to trade, there's not a lot of chop, or it doesn't channel very much, something like that. So what I do, I go through day by day, and I'm very well versed with the 9 and 20 EMA. You guys should be as well. It's a very simple kind of concept for indicators, a great indicator kind of coupling. So, yes, Prince, it will be saved on Twitch. I think Donuts will upload it to YouTube as well. But going through here, I know that, hey, on this 10-minute chart, that 9 EMA was a prime entry, A plus. This was A plus, A plus, A plus, right? We'll mark them out so it's more visual. 9 EMA tap, 9 EMA tap, right? You're not really going through a bunch of chop, maybe on the 1 or the 3 minute or something. These are prime entries along the way down, right on the 10 minute. So when I see that, I'm like, okay, well, I want to see if this chart does this continuously, right? And so far it does, right? Very strong. I know that if the 9 and the 20 on the 10 are being respected, if I went here on the 1 minute or the 2 minute or the 3 minute, I know that I would be able to gather an entry rather quickly. Okay, look at this. Strong uptrend. We'll go on a smaller time frame too, so you guys know what I'm talking about. Strong uptrend, 9 and 20 respect. Cross right there, very significant. Okay, when it crosses and you have a cross on a larger time frame like the 10 compared to like the 1 or the 2 or the 3 or something like that, it signifies a much stronger respect of a trend. So we see here, this is a very clean 9 and 20 kind of push down. Okay, we go through again. Not as clean, but still clean towards the end of the day. Okay, respecting that 9 and the 20. We go through here again, off the open, very clean. Okay, on the downtrend today, very clean, right? Look at the 9 and the 20. Now, I want to go, let me go through here like, let me just draw like a bunch of random arrows, right? And then we'll go through like on the 1 minute. Okay. Let me zoom out here. Where's that trade at? Perfect. So remember, we just looked at this dump of a day. Okay. Now look at the entries. Look at how many entries you could have got just off the 9 and the 20 EMA kind of parameter. So entry there, entry here, here, entry here, and here, here, here. 20 is never broken or closed above. There's one, here, there, and there, and then you start to see that reversal happen, right? Once it closed and shoved very strongly above the 20 EMA, even if you still held onto your short position, right, you should have noted this kind of low that was being held there, and saw that there was a higher low being put in, right? Otherwise, if you didn't see that, you got ripped up on. Yo, Shifton, thanks for subbing. 3 months, brother. So you guys see how I go in through and find. So I know that I like Nvidia, but it may change. Okay, I went through on Apple. I used to enjoy trading Apple, right? I went through, and I probably still would. I just have been diving into AMD and Nvidia much more than Apple these days. So, but if I go back here on Apple, right? Look at the EMAs. Very strong EMA, strong EMA respect, strong EMA respect on the 10 minute. This was kind of a range day. You see it was choppy. It stayed within these levels here. So you always have to think, hey, just because we got a trend day the day before, we may come into consolidation the following day, and I have to adapt. I cannot trade the same way that I did the day before into the following day, right? Very strong trend. Very strong trend to the downside. Look at the 9 and the 20. Right? Every time it touches the 9 and the 20, smack down, right? Like a fly swatter. Very strong trend. Okay, very strong trend to the upside. I think that was a FOMC day. Very strong trend to the downside. Yep, it is. This was the day when it gave all those gains back and more. So we see this, right? But it may not always be like that. Okay, we went through an Apple ranged for a long time. 1, 2, 3, 4 days. Then you got a nice breakout day, and then it continued to trend. But then even after that, okay, you got a couple days of a trend. This was not so bad, pretty good here, okay? But range day, EMAs are useless to you there. Range day, EMAs once again useless. Okay, this was not so bad of a day, but off the open, if you took any trades before 12 o'clock, they were super difficult. Okay, this is the same kind of move, intraday demand respect. Okay, not so much of a fun day to trade, right? So there are days where, and certain kind of time frames where tickers are not trading as cleanly. So maybe I'm trading and enjoying trading Nvidia this week or the next couple weeks, but maybe next month I may not like to trade it. That's why I always have a handful of tickers, right? I like to trade. I type this out right now. AMD, QQQ, Nvidia, PayPal, Microsoft, Facebook, Apple. I like Qualcomm, and probably thinking of something else, but this is practically what I like to trade right here. Big nasty. What time frame is this? 10 minute. I'm always scanning through on EMA kind of trends on the 10 minute, because I know if the 10 minute's strong, then the 5 minute's stronger, right? And then the 1 and 2 minute, I can get in very precise entries. Yeah, Qualcomm. Yeah, no, you're exactly right. It has to be a very strong kind of trigger trend, like maybe an inside bar or intraday supply or demand respect, something like that. Yeah, much love, Drewski. I do this because one, it does help me, right? It does help me, stay on my toes and stuff like that, and being very well, kind of versed going into the trading session each day. But I've all been in your shoes, right? And I was there in a sense of time not that long ago, right? I've been trading 2.5 years now, and even a year ago, I was going through some troubles, very very few, but still, you're still going to hammer out troubles as you go on, right? I still, to this day, there's plenty of room for improvement. You're never going to get to the point in your trading where you're like, wow, this is super easy cake mode, right? I look at trading as you can make it much more simple, right? Trading can be very simple and much more profitable that way because you're blocking out a lot of noise. But trading never gets easier, okay? Trading never ever gets easier. You just get better. Okay, you just become a better trader. So through time, give yourself patience. You will gather the experience. You will go through. The biggest thing for me was screen time, going through, looking at charts, looking at why things moved, why things rejected, understanding the dialogue between bears and bulls, and through time, there wasn't like a I guess there was kind of like a moment where it clicked, but then there would be, oh, it clicks. And then the next week it's like, damn, back to the drawing board, right? And then the next week it clicks, right? Through time, you're going to be able to, understand what kind of trader you are and what it's going to take for you to become profitable. And like I've said this millions of times. As new traders, you guys know what is a good and bad entry most of the time, but how many times do you enact on the good entry compared to the time that you enact on the bad entry, right? Intrinsically, due to your emotions, you're gonna buy the bad entry, right? That's what's natural. You're like, oh shit, this is going up. I need to buy it, right? What happens to these FOMO buyers? Like, oh, dude, we respected this kind of dark pull low right here. We're ripping up. This is gonna break VWAP, right? Those kind of silly breakout buyers, and then what happens? They get knifed on. How many times are you guys so afraid to take an entry because you've gotten knifed on, right? Well, that doesn't really happen if you've got a good entry, right? It doesn't really happen. Maybe very seldomly it does happen, right? Because the market is random. There are certain occurrences that do happen that, may scare a trader out of trading or this or that, right? But, you guys have the right idea, but maybe the execution is just poor. Um, how am I identifying if a range day and to avoid? So we'll go here on QQQ. Three minutes, pretty good. This is on the 3 minute chart. Now, if I just go through, I'm gonna delete everything. How long would be on? We're on the 42 minutes. Okay. So I can kind of see here, right? Pre-market high, pre-market low. Okay. Now for me to clearly trend, I normally see a pre-market high, pre-market low break, right? There's a pre-market high here, pre-market low break. You know what happens? It breaks down, breaks, and bases. Okay, and then continues to dump. Normally you will see, that's why I love the pre-market channel strategy, because what it does, it allows me to know when it's going to range or chop, right? There's a pre-market high and pre-market low. What happens? You stay within those channels. Okay, what happens on this day? Pre-market high and pre-market low. Okay, you stay within these channels, but remember, with intraday you also have your open range breakout, your orb levels and stuff, right? We're always going through marking our intraday kind of ranges as well, seeing what is being respected, right? This off the bat was not respected, and you see, dip buyers coming in through this demand zone right here. This is on the 3 minutes, so it's much smaller. Right? This would have looked a lot better on like the 30-minute or the hourly or something. Okay, same thing here, right? You want one of those levels to be broken. Pre-market high, pre-market low. It's right there, right? It breaks it off the open. Nice trend, comes back up. You can use your EMAs to get a strong trend. So going through on the example from this day, from Friday. Okay, so we have the pre-market high and pre-market low. Now, sure, we get a nice little support being put here throughout the day, but once it popped up and came back down, this was your intraday supply. Okay, that was your intraday supply. So in order for us to truly trend, right, we need a breakout. Now you can make money. We just like we did on Friday. We made money on the pivots up and down, right? But it was not a simple trade. This takes a lot more work, and this actually tests whether or not you're, a strong trader or not. I would say so. In slower, choppier markets, that's where true traders are born, right? I've gone through it all the last couple and a half years. And hot market, cold market, whatever it's going to be, especially trading small caps, because I majority traded small caps. Now through the COVID market, even then it was kind of difficult. Sure, you could throw anything, this or that, but you also lost a lot if you weren't careful, right? I was one of those guys who bought Kodak at 50 like a dummy, right? But you look past that and you learn through the situation. But if you're gonna think that it's choppy, right, always look at the price action. These candles up here, very choppy, very ugly. Remember, if you were right here, if you took an entry there and it ripped up, and then this big candle probably stopped you out, and then it rips back up to where you wanted to sell, right, that is an indication of chop, right? There's a lot of kind of scary movement there that you should kind of be aware of. This big red candle, red flag, okay? That's a big red flag. Hey, there's going to be some sense of volatility today, and it may not be good volatility, right? Good volatility is like this, right? Pops up, but they keep swatting it down. Pops up, and they keep swatting it down, okay? Now, poor volatility is when it's just ranging, right? Going up and down, but within those up and down movements of the channel, there's a lot of little tricks, right? Little kind of pullbacks, secondary pullbacks, something like this, where a lot of people are like, oh, this is time to go long. There's a big, strong green candle there, doji candle, right? I'm going to go long here, and then they get stopped out only for it to rip in front of their face. Okay, now when it is choppy, you have to always look at and try to find a channel. Okay, that's what I'm always doing. So, I can very easily mark, right, support or supply, or not supply, but resistance and support, right? Now you have a range, okay? You want to trade within that range. So I'll mark this upper wick here. Let me go like on the 10 minute. Okay, you want to trade within this range. Okay, that 10 minute doesn't help. Maybe the 5. Yeah, there we go. So I'm going to mark this bottom wick here. Okay, I'm going to mark this upper wick here. Now you can see here that this doesn't reach it on the supply, okay? But when it does come back down, you've got an, why did it do that? Okay, there. You see that when it does come back down the first time, it was respected and very heavily bought up. It took a lot of buying pressure to reverse that trend. As well as coming back down here, you can try to expect, or, I would really react to this demand zone, but I see consolidation here and a lot of buyers stepping in under this level right here, noted by all the lower wicks. Okay. So not a bad area, right? Look for your ranges. We'll go through on another choppy day. Hold on. What's another range day? Okay, this is good. Okay, you can try to mark like a demand zone off of this base and pre-market, and then a supply zone off of this base and pre-market. Okay, so you can see here, right? You've ranged in between these two kind of moves here. Now, of course, you can't just use the range. You have to use multiple levels of confirmation, right? Whether it's EMAs or, supply and demand, support and resistance, pivot points, anything like that. Yeah, Stock Rock, it will be saved. Paper Route Roddy says, yo, Maple, so with the Apple example, you had the 10-minute up, and usually you like the 9 and 20 EMA for ads, but that example, it bounced off VWAP. Obviously, you might not have taken that trade, but as an example, what would you do in that situation without knowing it was going to bounce on the EMAs, but, not bounce on the EMAs, but VWAP. I'm always weighing VWAP, right? But VWAP is kind of an overall support or resistance throughout the day, whereas these EMAs are following price action very closely, so it gives me a better gauge on the current move of the trend, right? Whether or not it's price action is going up or down, right? Whereas VWAP is a crucial support. Like, so when this dies down and it breaks in bases, we see all these upper wicks here. That's a strong area, but you can add that into confluence with your 9 EMA, okay? Let me catch up on the chat. Yo, what's up, Bad Buddha? Yeah, setting your stop loss. So, before you enter any trade, you should have a stop. I can go through an example right here. So let's just say, I'm always looking at pivots. So the most recent pivot, or this would have been the high of the day for the chart this day. Okay, remember, pre-market levels do not equate into the high of the day. You cannot say that pre-market high is the high of the day, okay, because it's not. So when we go live, when the bell rings, okay, it pops up. This is the current high of the day. Okay, so if you come up here and you take a short entry, this is your stop loss. Now, I never stop out right on the level. I will always give a little bit of wiggle room. Now, that is very subjective. When people talk about wiggle room, it's really what you are comfortable holding red. Okay, so it's also dependent upon how good your entry is. If you take a short down here and your stop loss is way up there, your contract's going to get toasted, right? So you're not going to have as strong as a stop loss or even any possible wiggle room. When I have an entry very close to my stop loss, okay, it's a very low risk setup, and I can, even hold it up to the next candle right there and not be hurt too bad. Maybe a 20% or something like that, but still, that's not as bad. If you hold it down there and you hold the wiggle room all the way up there, that's negative 60% without a doubt. So, when you have a stop loss, always enter. So we'll go through on another one, right? What's the next stop loss? Let's go through, and let's say that this was your most recent pivot. You want to add on the 9 EMA. Remember, wiggle room. You see how that pops up a little bit? If that stops you out, that's weak, right? That's really poor execution. You should be able to take your entry right there, not get wicked out. Getting wicked out sucks, and you guys everyone's experienced it. If you stopped out there, it's just going to rip in front of your face. So if you know that, it's better to hold on to your low risk entry a little bit more, right? Giving that little bit of wiggle room. Okay, something like this. Let's say, oh, that's my next most recent pivot. That's my stop loss. Okay, so if you buy here blindly, remember, always think about, reacting. I need to see when it pops up some upper wicks, right? When this pops up, it closes over the 9. That's a different story. But if you blindly buy on the 90 MA, you're still safe because you have a defined stop loss. If this breaks over, I want out. I don't want anything a part of that. And normally, if I take an entry there and it's ripping up into the EMAs, I'm not going to add more, right? You can't just blindly add more. It's why I don't really set blind bids, right? I'm really reactive and very kind of fluid with my active trader. Yo, Maple, I noticed that you have a delay on your charts when you traded live. Is that a preference? The only delay is on Twitch, right? If you don't want any delay or anything in the Discord, it's very low latency because Discord's video quality is not that great. But look, I mean, I'll show you guys right now. Right, let me go to settings. Where's the delay at? Hold on. Look, this is my OBS settings. So go to output. Where's it at? Where's the stream? Where's the delay? I know that you can set one. Oh, right here. Stream delay. 1 second. I have it as low as I can, but since it's streaming, just like when you guys watch something on TV, if you guys watch the New Year's Eve ball drop, right? A lot of you guys, it was already 12 o'clock when the ball dropped, right? It was probably still 10 seconds, right? There is latency, right? I don't know why we're in 2022 and people have a hard time understanding like latency, right? So on your stop loss, do you wait for the candle to close? Yes. Normally I will wait for the candle to close. Do not use market orders. Yeah, I would say watch the spread. I use market orders, right? Sometimes I do get a shit average, but most of the time, I'm looking at a very precise kind of entry. What's the 84% rule? To the beat, y'all says. Let me see here. Okay. Let's say that you take an entry. Now the 84% rule works when you get wicked out and if you kind of have a poor entry to begin with. Okay, so let's say that you take an entry right there, right? Not bad, really not bad. But a lot of people, they have a stop loss where it's break even, and I agree to that to an extent. It's really contextual because you have to really know your pivot points. Okay, you really have to know what your pivot points are doing because you may not have the best entry. Yo, thanks, my Buddha, for that sub. You may not have the best entry, but you may still be within a very strong trend. Okay, so if you have this entry right there and you get wicked out, okay, let's say you stop out right here. So you buy, or you stop out there. This is where you originally bought. This is just an example. Okay, but price comes back down to your entry, maybe even a little bit past it. You still have that whole candle right there. You should take it again. Take it again, right? Why does that work out? One, maybe your entry was okay. Maybe it was a poor entry. Maybe you had an entry like down here. Okay. So you have a poor entry, poor execution, but a proper thesis. Your thesis was correct. You were like, hey, I'm buying this put here because I think it's gonna go down. Okay, but you got wicked out, maybe weak emotions, paper hands, poor execution, poor entry, all of that, right? But your thesis was right. That's all that matters at the end of the day. You could have awful entries, this or that, but if you knew it was gonna, or if you had a feeling it was gonna dump down through, your kind of analysis through pivot points or overall market trends, anything like that, then the 84% rule, right? So you take an entry, you stop out, comes back to your entry, take it again, and look at the reaction. So we'll go through on something like that again. Let's say like right here. Let's say that you buy right there, which is not a bad entry for a long. It's really not. Right? You're buying on a downtick, right? Bravo. It's holding a higher low. Right? Not a bad entry. But you get wicked out, right? Because the higher low is broken. Okay, maybe even this higher low is broken. Okay, so but if it comes back down to your entry, hold on, let me mark the stop out. if it comes back to your entry right here, you should buy it again. Okay, why? What happens? Your thesis was right because it does push up the VWAP and give you like a 2-point move right there. But maybe the execution was poor. Maybe you didn't leave room to add into this possible shove down of the pivot or something like that, right? Because if you can see here, this very low doji, low of the day, that's a demand zone. That's where it gets soaked up. So think about that, okay? I've taught this to members in my group, and a lot of them use it, right? If you're just for example purposes, right? If you are a member in the group, right, could you type out that you have successfully used the 84% rule before, right? That would really help a lot of members who, or just people in the stream that may have not have heard of it before or think it's some kind of finicky rule, this or that, right? We use it all the time. Yep. Oh, wait, hold on. So MG, yes. Sen, yep. Sooner, show enough, right? Ryu uses it. Langshot, yep. Saul Goodman, 50 Cent, right? So it works all the time. Bad Buddha works, or Bad Buddha uses it. Nicole. It's something that works because as humans, we may not have the best execution, right? We may not have the strongest emotions at that given time. So, and it helped, right? What also does it do? It erases the loss. It erases your loss right there, and you make your money. You make your money back, and you make more. It also gives you confidence in your trade, right? You're like, okay, that actually did work out. I actually know what the market is kind of doing and what direction it will move, but maybe I need to work on my execution or leave it a little bit more room, or maybe just be a bit more patient to add on demand zones. Why is it called the 84% rule, right? Because 84% of the time, it will work out in your favor. Now, I don't know the validity of that, but it does work out quite a bit. This strategy is from Jared from Live Traders on YouTube, right? You can just type in 84% rule on YouTube and you'll find it. Let me catch up on some questions up here. Do you market order a limit when getting into a trade? How do you deal with option spread when you're market ordering? Normally the option spread on QQQ, pretty cheap. I mean, not that bad. Now this is a further out expiry. I wish I could show like the further options, or last week's on Friday or something. But going into tomorrow, right, you can see, or even right here, $5 spread, $5 spread, $4 spread, $6 spread, right? This is $11 spread. It's really not that bad, right? It's really not that bad. What are your thoughts on using thinkorswim versus Webull for strictly buying, selling options, not charting wise, just to fill orders? A lot of members use that in the group, right? Donuts does that. I'm not sure who else exactly, but off the top of my head, but a lot of traders will just use thinkorswim to chart, and then on their execution page or whatever, they'll have Webull, right? Because the benefit of practically no options contract fees. Although you're analyzing on the 5-minute, you execute based on the 1-minute. Yes. Would I reduce size on the time of based on the time of the day? Yes, I do. Normally, before 12 o'clock, I've already made my goal. I would say 90% of the time. And after that, even if you haven't made your goal, right, you should be sizing down, right? Because how many times do you guys super green off the morning and the rest of the day you're just pissing away gains, right? You're just taking small, death by 1,000 paper cuts, and your once big hit daily goal is now a quarter of that, right? Or half of that, right? That's a bad feeling, and really it ends up making you revenge trade. Yeah, 1 to 5. So on the 5-minute, right, I'm looking at the overall trend. I can see here, the 5-minute's not bad to execute either. I will execute on the 5-minute, don't get me wrong. But most of the time, right here, like something like this, let me just draw like, we'll just draw that. Okay, so the 5-minute does not give me as many entries, right? There's a lot of gray area here. Maybe times where it comes very close, but not really the best. But if I go here like on the 1, and I gotta zoom out again. I don't know where exactly that's gonna be, so we'll just find where it says bang. Right there. Look how many entries we got, right? There, 9 EMA, 9 EMA, 20 EMA, 9 EMA there, 20 EMA is all getting eaten up, 9 EMA there, 20 EMA is all getting eaten up, right? So many more entries, whereas like the 5-minute really only gave you like 2 or 3. How am I finding setups with good range? It's not a, I mean, I don't really care about setups or, I mean, I do care about formations and stuff, but I know every day in the market, QQQ, NVIDIA, AMD, anything within the QQQ holdings is going to run. Anything within the SPY holdings, they're going to run. You're going to have an opportunity every single day to make 100%. Every single day. Whether or not I make one, someone else in the room makes one, every single day there is opportunity. In these range days, like this choppy day here, there was an opportunity to the upside for 100%, opportunity to the downside for 100%. If you take a trade and you get a dump like this, that's insane, right? You're going to make a lot of money, right? And this is a range day. This is probably only like a 1% move, right? Yeah, 1.6%. That's about the average, okay? Even on a move like this, if you short because you took this supply zone right there, right? You shorted that and you'd bring it all the way down to this demand zone here, zone to zone. That's a huge move, okay? So I don't really care. I don't want to get into the watch list rant because it's all just, who gives a shit. But, just find a few tickers that you like, 1 to 3 tickers, right? I recommend looking at NVIDIA and AMD. Okay, they're very strong tickers, as well as QQQ. But let's say QQQ is choppy, right? NVIDIA or AMD may not be, and you don't want to force yourself to trade chop when other tickers may be trending. That's why I keep this up, and I'll constantly, scan through what tickers are upholding a strong trend and which tickers are chopping around, and I'll chart them out, but may not be trading that choppy trend at the time. So let me see. Do I keep your stop losses for the same every trade, and do I move it at all? Yes. So we always, if you're in a winning trade, let's say you take a winner, you take an entry here, right? Move your stop loss up. So the way you do that, mark your higher lows. Okay, major trend higher lows. Oh, I'm still in the trade. Oh, I'm still in the trade. Still in the trade. Still in the trade. This is how you hold on to winners. Pivot points. Okay, higher low, higher low, higher low. Right? Still in the trade. Oh, when we're far extended, remember, you want to hold on, but where do you scale? When you get higher highs, you scale little breadcrumbs along the way, okay? You like Goldilocks or the Red Riding Hood, right? You're just leaving little breadcrumbs. Okay, so you should have been scaled out, scale some more, scale some more, scale some more. Whatever you have left is going to be very small. And if you get stopped out on the low break right there, you've already made all your money along the way. Yeah, Pink Wang, yeah. We pay like base for thinkorswim is like $1.30 round trip, which is not the best. When having both options chart and stock chart up, is this distracting y'all? No, I always have the options chart up. Always. What you can do also, like a trick, like yeah. So what you can do, I don't really, you have to be, like well versed with supply and demand and have an understanding, okay? But a lot of people are not charting out the options contracts, this or that. But something that I really like to do is supply and demand on options contracts because it works, okay? So remember, you bought there. We talked about an entry there on the 9 EMA on the underlying. So let's draw a demand zone. There was a buyer here who came in and bought, look at the volume. Okay, 324, 324, 353, right? There's a buyer here soaking up this area, 633, 718, right here, 600, right? All within this area, right? Tight consolidation prior to a large move up. Okay, so the reason why this stopped down there, yes, there was also the underlying, but that same buyer for these options contracts bought again here, and he bought again here, right? But he's also scaled out. If he bought here, he's selling there. If he bought here again, he's selling here. Why wouldn't you? Why would you not sell into supply? Okay, you can see all I've marked here is that consolidation. Supply, supply. Okay, I'll go on to a totally different contract, right? Let's go to like Nvidia. Let's just go to like I don't know. I don't know what this is gonna look like. Okay, cool. You can see here. We'll just mark a support. Okay, but I can mark a supply zone or demand zone, excuse me, there. Now you can see buyers absorbed this area here. They absorbed it here and they absorbed it here, very slowly of a trend here, right? So you can see where they're buying it and where they're selling it. You can see this large upper wick right there. Okay, supply zone. Now if you didn't mark that one, you could mark this very obvious spike. Okay, just the upper wick right there. Okay, so you can see demand, this is where they're buying it, and this is where that same seller sells the contracts. Okay, we'll go through on another one. Let's go on a totally different ticker, AMD. Let's just go to this one. I'll just randomly click this contract, whatever, go to charts, change the date to the 14th. Okay, you can see, right? Buyer there, seller here. Okay, they've bought it here, they bought it here, and they soaked this up. Where did they sell? Very obvious pop up, boom. You should be selling there, and you should be selling there again. A lot of people don't talk about that. Yeah, I may follow the underlying this or that, but a lot of times you will see the options contract, a very clear supply and demand being purported onto the screen. So scaling out on those higher highs, would that not have laddered, or would you not have laddered when it pulled back? Remember, you don't want to aggressively ladder, right? I told you guys I only use like one or two at a time, or 2 to 3 at a time, in addition to like my original entry, because you will get caught up, right? Because it's something. Think about it this way, yeah, in hindsight this works, but what if you're laddering? You've laddered here, you still have your original entry, you ladder here, and you ladder there, right? And you've got 4 options contracts now to manage on 4 different active traders, whatever, however you're going to manage it. When you get into a big ass dump like this, it's going to scare you and you will lose a lot of money. So that's why you really should only be laddering 1 or 2 in addition to your original entry. Is there an intraday time frame that you tend to draw your zones on? I like the 5 and the 10 minute. I also look at the 15 and the 1 hour. Do I use this exact process if you're day trading a random ticker with morning news, as you said you would a QQQ, or do they differ because you're less familiar? Process of what exactly? Sorry, I've covered a lot. Yeah, you're exactly. Sen says this. I like glancing at the options chart even just to get a general sense and ask myself before I take the trade, am I paying relatively a lot for this contract or relatively little? Although, of course, high can always go higher and low can always go lower. Exactly, Sen. You get it, right? Would have been on now for an hour. Okay. Let me look at some other notes. Oh, give me 1 minute. I'll be right back. Okay. I wanted to talk about break and base. Now, it's very subjective, okay? Now, what break and base really does, okay, it allows you to, now, it doesn't really work on range days very often, but let's go to this trend day. Okay. Now, what it allows you to do is, I have a few notes here, and it's a confirmation of risk, okay? When you have a, remember, I don't like to buy breakouts. I really hate buying breakouts, okay? So, I mean, it may not be reported on the screen very well. Maybe right there, low of day. Yeah. So it gives me a level for risk. So normally when we break through a level, you want to see that level flip. So this was support. I want to see it turn to resistance. So it breaks this level, and you noted by the upper wicks here, supported by the 9 EMA, it bases. So it breaks down and bases. So this once support is now being used as resistance. This is my stop loss area. I'll stop out an area above, maybe above the 20 EMA here. It prevents weak breakout trading. So, if you are like, like this, if you were bullish, right? And you buy the breakout because it's breaking out of the 9 or the 20 EMA right here, closing above the 9, right? If you buy that breakout, what happens to you, right? Two big bearish engulfings, your whole position gets wiped out. Okay, that's why I need to have that confirmation. We need to see it break up, come back, retrace or retest, and continue forward. Okay, but that didn't happen in this case. And with a break and base, it may rip without you. It may just, sometimes you don't get the break and base like this. Support level low, right? Where's the base? You don't get the base here. It just rips through. So when that happens, if you really need to get into the trade, or you feel like, you just want to trade the momentum on a breakout, what you do is you trade candle by candle. So instead of a break and base, now you have to be very quick with your thesis. You want to get an entry, and you're not going to stop out until in the downtrend, the previous lower high is broken and turns to a lower high, candle by candle. So let's just say it breaks out, you don't get a retest. Let's say you have an entry there, your stop out should be there. Okay. Now you go down into the next candle. This is your next stop out. Doesn't break through, you're still in the trade. Stop out there, you're still in the trade. Still in the trade, still in the trade because your lower highs are still consecutive. You have not gotten a higher high yet. You're still in the trade, still in the trade. Now you get stopped out. So you've now taken this entry without a base, without a retest, and you've stayed in the trade looking at your pivot points on this momentum move. You've held it for now from this entry 1, 2, 3, 4, 5, 6 minutes. No EMAs being respected. Very strong momentum as noted by the extension from the 9 EMA. And you get the bottom. Okay? So, a lot of people are not going to talk about this. But that's how you can stay into a trade without a retest or a break and base or a 9 EMA tap. You didn't get a single 9 EMA tap here. This is on the 1 minute, the lowest time frame you can go to. And that's how you get into the trade and stay into a momentum trade. The break and base also, you must not become overly biased when searching for a break and base. So a lot of times people are like, they'll look at a small time frame and think that's a break and a base. Okay, so like maybe like this resistance here, right? You break up and base, and you think that's a base, and what happens? You get dumped on. Okay, now that may not be the best example, but maybe something like I don't have a good example, but right, don't be biased towards any kind of one strategy or any kind of one tool or anything like that. I always have to have multiple levels of confluence. Do we look for break and base at key levels like on VWAP and 200 EMA? Yes. So that may be a good example to look at. So like here, right? You break down, you base, right? Comes back up, it's still being used, right? This was once support, and then it flipped to being resistance on the downside. Now, this is a very clean break and base setup right here. VWAP, everyone should be accustomed and know what VWAP is, right? But it breaks down, okay? The breakdown, it bases here, also has confluence with the 9 EMA, and see the continuation. This is your risk level when there is not a clear risk level. Yeah, knees and nicks. I trade live every day. Not on Twitch though. I trade live every day in the Discord. I'll trade once a week on Twitch. Just going through our kind of daily process and everything. But yeah, every day in the Discord. I'm on stream 8:30, an hour before open. We go through, we pick options contracts and which tickers we're going to trade, right? Here's all the contracts. There's your charts, right? I do this every day. This is every single day. Shit, dropped my water. Now, yeah, it must be on a key level or indicator. So a key level would be like a support, like maybe this support right here, you mark it across, right? That broke and based upon. Remember, the base does not have to be right on the level. It can be a little bit above it, a little bit below it, or right on it. Yo, what's up, Senseason? Good morning. Do I use net inflow? No, I know what it does and how to use it. I just don't use it. I use VIX though. I use VIX and I watch NQ every day. Yeah, but no, that it works to the upside as well. Yeah, breaking base works to the upside. Like, I don't have a clear example here. Whoops. Like right here. Not bad. I want a cleaner example. Right here. You break VWAP, comes up and bases. Now you could have either have marked this level right there, right? There's that resistance level to be broken. You break the resistance level, it comes back, retraces, it bases, okay? And then you see the reaction. Let's see, 3D breaking base. Yep, nice pow mow. How big are my monitors? I have 32-inch monitors, 32 inches. Yeah, I mean, I'll restore it, right? Normally it's like this. I just maximize the cell. See? I think last thing I'll cover would be the 9 and the 20 EMA crosses. Then we'll wrap it up. I'd probably write a thread after this or something. So you can see here. This is a pretty good example. Now, normally, when you get a 9 and 20 EMA cross, right, that's a pretty strong bullish signal. Or bearish signal, right? Either direction, but it just adds to the confirmation. So we could see that there's a support here, the 9 and the 20 EMA crosses. You see some bearish engulfing candles along this move, very weak kind of trend. So you can start to gather a thesis that, hey, this is going to break down, okay? But also looking at the major trend, you can't get caught in like, oh, I'm in this micro trend, it's bearish. The micro trend may be bearish, but the macro trend may be bullish, right? Higher low, higher low, higher low still. So always take that into account. But with the 9 and 20 EMA crosses, okay, you can see that many times there's strong levels to take an entry and watching the reaction. So this is where the 9 and 20 EMA cross. If you entered based off of that or waited for a pullback, there was a strong reaction. 9 and 20 EMA cross right there. You enter on this area, nice shove down. You would scale out. 9 and 20 EMA cross right there to the upside. Okay, maybe you take an entry right around this area. Or on the 9 EMA tap, very strong move. Okay, 9 and 20 EMA cross to the downside, still a good move, right? You take a short from here, 138 all the way down to 137, right? A 1 point move. It may, remember, depending upon the trend and what time of day it is, it may not have enough volume to sell off, or buyers may just be holding it up and locking in profit on little moves up. But watch these crosses right here. When they move sideways like this, they're useless to you and they're churning your contract. So we'll go to another day. Okay, 9 and 20 EMA cross there. You take this general area. Now, if you miss the cross, you can add on the 9 EMA taps, right? See these easy taps right there. And remember, later entries dictate quicker profit taking. You start to see aggressive buyer on the puts, aggressive buyer on the puts, right? And then they start to lock in profit around here, right? They start selling, or those sellers turn into buyers, the shorts on the underlying. Okay, so remember, later entries, quicker profit, because if you don't, you'll get ripped up. Now, when this crosses, look, 9 and 20 EMA cross, what happens? Very strong movement to the upside. Okay, now you will get into instances where you have fake out crosses like this. See, across to the downside, you would think that it's going to become a bearish trend. Mark your pivot points. Remember, I use EMAs and pivot points. Those two are very strong together. This should not have stopped you out because it held that support level. Yeah, it comes down below it a little bit, but buyers step it up. Can I show how VIX is inversely related to the underlying I'm trading? So I wouldn't say so much exactly the underlying, right? A lot of tickers in the QQQ holding will follow QQQ, and QQQ, or really VIX is the inverse of SPY, but SPY and QQQ are relatively, in tandem at times, right? The market chooses a certain direction each day. Side trades may go easily. How do you move your stop losses? Can I show you on Active Trader? So I don't really use the Active Trader ladder. I never use it. Remember, I keep it very simple. I am all mental. So like if I have an entry here, this is my stop loss now, right? Where the proper entry would be. This is my next stop loss. This is my next stop loss, right? I'm mentally moving it down. But yeah, on VIX, right? So let me go to QQQ from Friday. Do we look at breaking base? Yeah. Oh, okay. I covered that one already. SETI. So one thing that I look for in VIX is always watching whether or not it is the trend of VIX, right? Is VIX bullish or is VIX bearish? Okay, so this is VIX here, both on the 1 minute time frames. We'll probably go on the 5 just to clean it up a bit. Okay. So you can see here, VIX was very bullish, right? If VIX is bullish, what happens? VIX, or your underlying tickers are typically going to be bearish for the most sense. Not always. You do have those that may stand aside from VIX and stuff like that. But you can see, right? Higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows, right? So what happens all on this day, on Thursday? Lower highs and lower lows all day. Now, when we get into this very large spike here in pre-market, right? Spike up. See the spike down on QQQ, okay? But off the open, right? It's got to come back down after being, after getting a huge pop up to 22. Okay, so when it comes back down and you see the momentum on VIX to the downside, you're not seeing any kind of supports being held or anything, right? That gives you a stronger kind of confirmation for your underlying. Now we can see here that VIX has chopped around and here, but I want to talk about crucial levels. So right here, this support right there has been held pretty much all day on VIX, which is the resistance, okay, typically for your long. Now it doesn't show as much here on VIX dumping down, but possibly, I haven't looked at SPY, so I don't really know for sure. Right? Yeah, right there. SPY, you break through and it pops up a little bit, but remember, just because VIX is dumping doesn't mean it's going to be overly bullish. On Fridays, I really feel like you guys should be more aware of theta decay and how, market makers will pin prices and just really churn accounts just because Everyone's thinking Friday, oh, let's end it off with a bang. So if everyone's thinking let's end Friday off with a bang, not everyone's gonna get it. Let's see here. Yeah, on TOS negative VIX. Yep. Yeah, exactly. So, but I think I'm gonna wrap it up here, right? Pretty good session for you guys this morning. I feel like everyone should be somewhat more aware or in tune going into the markets tomorrow. Now, I do want everyone to just be patient going into tomorrow, right? Treat tomorrow as you would any other Monday. We got a very strange setup here across the board on a lot of the indexes. Okay, so on Mondays, statistically, everyone's worst day. So just be very patient. I would size down, and unless there's a very strong trend presented to us, then if your edge is presented, right, don't hesitate. But just take it very easy. Everyone's coming off a holiday. Everyone's gonna be a little bit groggy, maybe a little bit rusty. So I want you guys to, one, be patient. If you're new, just avoid the first 30 minutes to an hour, right? You guys should also take note, set an alarm for like 10:15, 10:20, 10:30. Always looking at, that kind of strong point of reversal throughout the markets. So, yeah, this stream is saved, it is recorded, and it will be on the Twitch VOD. So, once again, thank you guys for tuning in, right? I hope that this helps. For those of you in the House of Stacks, right? Remember, make sure, if you haven't already, check out the homework channel, okay, for the day, or for the weekend, right? Make sure you check that out. A lot of people have already participated in the homework, so I'm very, very happy to see that, right? It's only going to make you guys better. I know it seems grueling, but seeing participation like this, it's only going to make you better. You're only going to improve. As well as, right, I'll be going through questions today. I got these last two I need to get through. And if you have any questions that you really need or help understanding with, right, just go through the questions channel. If I don't answer, right, possibly one of the mods will answer if they have the free time. Yeah, Super Chicken Nuggy. Yep. So if you want to join the Discord, check out the Patreon. We go through, I trade, do live sessions like this every day. I do live stream trading every single day for about 4 to 6 hours a day. Profits and percents. These are members gains. Okay, these are members. I like to see members gains. I could sit here and post my gains all the time, but I need to be able to prove to myself and others that what we do, the work in the Discord, creates profitable traders. Look at Booch. Booch has been in the Discord for 4 days. Dude upped his account 30%. Okay, look at Lil Joe. First time posting here, 13% on the day, right? These are all, this goes on for a long time too. I can't go through every single one, but this is all from Friday. Friday was a shit day too. But, this is all members' gains and some losses here and there, but I'd say 95% gains. So, I put in a lot of work, right? You can ask anyone in the House of Stacks. You can DM me on Discord, right, if you have any questions about the Patreon, anything like that. So, but yeah, Ninja Nard, he won the giveaway, and he joined like 2 days later. He was like, this is where we need to be. So, once again, thank you guys for tuning in. I hope that this helped prepare you going into this week. I will be just streaming in the Discord all day tomorrow. I probably will, or not all day, but until about 1 or 2 o'clock or something. But I'll stream one day on Twitch this week, maybe Wednesday or something. I don't know. We'll figure it out. So you guys enjoy the rest of your weekend, right? Eat something good, hydrate, make sure you stretch. We sit here at the desk a lot, and if you're not stretching, you're just gonna fuck your legs up, and your back. If you have back problems, stretch your hamstring. That's probably the best thing you can do for your back. So you guys take it easy, right? Enjoy the rest of your Martin Luther King Jr. Day. Happy Martin Luther King Jr. Day. I will catch everyone in the House of Stacks Discord tomorrow, an hour before open, of course. We'll go through pick contracts, everything like that, talk about my commentary of the market, what I feel like I have a sentiment on, and everything like that. So you guys take it easy, and have a good rest of your day.